Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Monday, December 8th, and this is your London Open. Two themes set the tone today. Hawkish chatter out of Europe meets growing bets on a Bank of Japan hike, while a softer US dollar is giving commodities and select currencies some air. Starting in Europe, a notable signal from the European Central Bank. Isabel Schnabel says she's comfortable with market bets that the next move could be a rate increase. That nudges expectations toward a firmer euro stance. Around Brussels, politics remain busy but cautious, from efforts to break a European Parliament budget jobs deadlock and final talks on corporate sustainability rules, to broader debates on defense industry follow-through and how to handle Washington. The mood is steady, rather than combative, but policy direction is clearly in play. Over in Asia, the Bank of Japan remains the focal point. Japan's wage growth has reinforced expectations for a December hike, and despite softer revised growth figures, the yen retains a constructive bias. Tokyo is watching the currency closely, with Finance Minister Satsuki Katayama warning about one-sided, rapid moves and pledging action if necessary. For traders, that matters. Meanwhile, China's November trade picture was mixed. Overall exports surprised to the upside as manufacturers leaned on other markets. But shipments to the U.S. slumped by a sharp double-digit pace. That dovetails with ongoing supply chain shifts across Asia and chatter of prospective tariff measures from Europe. Turning to markets, the U.S. dollar index is softer, slipping below 99 as rate cut bets rebuild. That's helping gold edge higher and keeping silver supported, which is consolidating above 58 with a bullish tone still intact. In currencies, the Australian dollar is firm, helped by upbeat Chinese trade figures and with the Reserve Bank of Australia decision in focus. The yen is steadier on policy expectations and safe haven interest, though euro-yen remains bid after the softer Japanese growth revision. In India, the rupee opened weaker against the dollar amid foreign investor selling and a dovish central bank stance. What's ahead? The calendar is light. In Europe, only lower-tier data like German industrial production and Swiss consumer sentiment are due, and they're unlikely to move central bank trajectories. In the U.S., watch the New York Fed's inflation expectations, which have been easing across major surveys since the April spike. A few central bank speakers could sprinkle nuance, from the European Central Bank's Cipollone and Villeroy to the Bank of England's Taylor and Lombardelli. What I'll be watching today: the euro against the US dollar, with a bias to grind higher if ECB hawkish hints meet a softer greenback. Dollar-yen for signs of a pullback as markets lean into a potential BOJ hike, and with Japanese officials jawboning volatility. The Aussie dollar versus the US dollar, looking for an uptrend to persist if China's trade impulse and RBA anticipation keep sentiment supportive. And silver, where consolidation above recent levels leaves room for an upside bias if the dollar stays on the back foot. The takeaway: policy expectations are doing the heavy lifting on a quiet day today, and for now a softer dollar and divergent central bank paths are steering the open. Markets are constructive, but still sensitive to any shift in tone. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.